coordinated for Britain's future success.
But Russ, and we tried actually to explore this a little bit with Sir Keir, is to try and understand the industrial policy. So you look at, for example, Germany. I mean, they're spending a lot of money, which, you know, they can't necessarily afford more than the UK, but they've decided that chips are critical for that infrastructure.
Absolutely. Germany, the US. I was in India last November. They're spending a lot of money, and I was looking at the announcement about Micron earlier today that you discussed. Many of these large nations are rolling forward with an industrial policy in this area. I think the UK needs to pull these components together. The strategy is there, but how we now actually implement that is going to be critical for any government going forward.
Is the government taking this seriously enough, or are they distracted?
No, I think they're taking it very seriously. I think it helps to have a prime minister who really understands tech, believes in tech, and you see that rolling through the various government departments. So it's very encouraging. I hope that continues with whichever government we get in 18 months.
The prime minister, of course, talking about an AI super regulator.
Yeah.
I mean, can they really, you know, lay claim to that?
I hope so. I mean, Britain has a great reputation globally in terms of its regulatory environment, rule of law, good regulators like the FCA and the CMA, and I think having Britain come up with a position that says we're not going to go to the extreme of the EU. I think some worrying signs coming from there. It's not going to be what people call the Wild West of America. I think Britain can come up with a more balanced middle ground, and I think this regulatory summit on AI in the autumn will start to lay some of that groundwork.
Russ, there's something that actually I think Ken Griffin of Citadel said, which really struck with me last week on AI, is that a lot of the founders or a lot of the entrepreneurs that work in AI have to stop selling it too hard, because if it doesn't deliver in the time frame, then we'll look back and say, actually, no one cares, and not understand what happens with it 3-4 years down the line.
Yeah.
Do you think there's truth in that?
I think there's a lot of truth in that. I think the near term, we have to manage expectations. There is a lot of hype at the moment. There's a lot of money. There's a lot of investors chasing AI. But I think we have to make sure that we're building the right foundation so that 3, 4, 5 years, the compute power, the data sets, the talent, the regulatory framework is all in place. So we're going to want to see some quick wins, but I think like any new disruptive technology, we're going to have to be a bit patient and really make sure that those foundations are built. It is transformative. It will take some time.
Transformative as a force for good, or what do you worry about in AI?
Both for a force for good and a force for evil, sadly. And I think there's a lot of opportunity behind it, but if we don't get the frameworks right from a regulatory point of view, if we don't understand it and educate the broader population about some of the risks behind this, it could be problematic. So we'll see great things and we'll see some pretty awful things, and we have to prepare ourselves for that.
Russ, thank you so much. Russ Shaw, there, founder of Global Tech Advocates. Now, coming up, it's been a mega week for central banks. We'll get a roundup of all of the rate decisions and market reaction next. This is Bloomberg.
Why does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to the Open, everyone. 53 minutes into the European trading day. We're holding on to gains for the moment. And look at that. Actually, if you look at what we saw this week, global stocks heading for the best week since March. So let's not snub at that. We need to look at what some of the traders are thinking about China stimulus, where that ends up, and of course, some of the exuberance surrounding artificial intelligence firms. Now, let's also take a look at what the markets are watching for today. And the BOE's inflation expectation survey expected at 9:30 a.m. London time. That's followed by your area final CPI figures for May. That comes at 10 a.m. 3 p.m. we'll get provisional University of Michigan figures, including U.S. Consumer Sentiment Index for June. I think that's one of the favorite, actually, data points of Jay Powell. And lastly, a meeting between the NATO defense ministers continues in Brussels today. So has been, we all know it. Congratulations, everyone, for getting to Friday. It's been a big week for central banks, the Fed, the ECB, and this morning the BOJ, all announcing rate decisions. So for a roundup of all of the market action, and there's been a lot of it, we're joined by our markets reporter, Valerie Teitel. So, Val, we made it to Friday, just about 3 big central banks. I don't know the one that was most interesting. Maybe Fed?
Well, the Fed for the confusion element, maybe, that of some of the market participants afterwards, but the ECB just for their undeniably hawkish press conference. And a lot of that really led to the market reaction we saw yesterday. We saw dollar really falling out of bed, the euro having its best day in over a month, rallying some 1%, really on this subtle divergence that the Fed is communicating that they're slowing down. They're slowing down even more by pausing. And the ECB is still full storm ahead, guaranteeing almost another hike in July, and rumors swirling that another one in September is going to come. All of that really led to not even the move in the dollar yesterday, but quite a big divergence in the performance of treasuries versus bunds. Bund yields went way higher on this hawkish language, and treasury yields rallied quite decently on some softer than expected economic data out of the U.S.
Valerie, overall, I know there's no big surprises, but you could, you argue that if you look at the hawkish tilt of the Fed, it's not something that a lot of people were expecting. And you wonder why they didn't hike if they're so hawkish going forward. But are they trying to guide the markets so that they're not surprised by what they say?
Supposedly, they could just be trying to set a hawkish bar and then walk back from it. That is kind of a common thing that central banks do. We see it more in EM economies where they really do try to talk a tough game in order just to give them room to back off. But if other central banks take them at their word that they are hiking 2 more times this year, we might see some more hawkish surprises, maybe even next week, as they don't really want to fall behind the Fed. They don't want to let their currencies depreciate. And we might see some more hawkish surprises if they do take the Fed at their word.
Yes, very quickly, what do we have next week?
Oh, next week, Central Bank of Turkey. Some rumors are a forecast from JP Morgan, they could hike to 25%. We get the Bank of England. We know that they're going to be aggressive in their language. Also have the Swiss National Bank. We've heard some hawkish comments out from Jordan recently. They're due to hike another time. And then from Latin America, the 2 big economies, we get Brazil and Mexico.
Great. Thank you so much. Our Valerie Teitel there with the very latest on some of the central bank moves. That's it for the European Market Open. Surveillance Early Edition is up next, and this is Bloomberg.
say race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress, and somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. This month, Bloomberg brings you the latest from China's 14th Annual National People's Congress, including China's COVID recovery, economic outlook, and geopolitical tensions. Continuing coverage this week on Bloomberg. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The ECB raises rates to the highest level in 2 decades. President Lagarde says a July increase is very likely, and the Bundesbank president hints at more hikes after the summer. The yen drops as the Bank of Japan keeps its ultra-loose monetary policy and says it's ready to add stimulus if needed. Plus, the former U.S. Secretary of State, Henry Kissinger, tells Bloomberg the weakening of Russia risks stoking new tensions. Now, first thing is first, let's check on the markets. So we have the press conference for Governor Ueda of the Bank of Japan. For the moment, European stocks getting some 0.4%. Not the exact same picture in the U.S., where we're also getting triple witching. So we have some of the quirky moves. In Europe, I think out of the 20 groups that make up the stock 600, all of them are on the high. And then if you look at what stocks have been doing in the week globally, they're the highest since we saw in March. A lot of traders trying to figure out, of course, some of the Chinese stimulus bets, but also maybe pausing because of the exuberance that we saw in certain artificial intelligent stocks. Now, U.S. 2-year yield 4.6906. Our Valerie Teitel was talking to us about the inversion, of course, about German and U.S. 2-year yields. What that means, you could say, look, it's technical because of some of the adjustments. You could also say we haven't seen it this inverted since right before the U.S. banking crisis over in March. And then euro dollar 109.40. We not only had a pretty hawkish Christine Lagarde, we also heard from Mr. Nagel of the Bundesbank saying that the ECB may need to keep raising rates after the summer break. So that's a look at the markets. It has been, we know, we survived just about. It's Friday, a big week for central banks, capped off by the ECB raising its key lending rate to 25 basis points, and the BOJ actually keeping policy in place. Well, joining us now to discuss the Bank of Japan is Bloomberg's Valerie Teitel. So, Valerie, no surprises from the BOJ, but the markets are really focused on some of the other things that they said shortly.
Yeah, it's about the nuances of their language when they talk about their inflation outlook. But thankfully, there were no surprises when it comes to their yield curve control program. It always keeps the market on tether hooks, even though nothing is expected from the Bank of Japan. We know yield curve control is likely to be dropped in almost a surprise move. We didn't get that today because they maintain their view that inflation will slow over the coming months. And if we flip on, I can concentrate on some things we heard from Ueda in his press conference, one of which is that he actually expects inflation to slow by the end of 2023. If we don't see a different kind of language from Ueda when he talks about inflation, we know he's likely to be sticking with this yield curve control, with the easy monetary policy when it comes to their rate decision. And also, he said their wage outlook is the uncertainty around wage inflation remains quite high. Remember, the Bank of Japan really wants inflation to be sticky. They want to make sure it's entrenched before they let go of yield curve control, before they hike rates. And we didn't get a hint that that's coming anytime soon.
Valerie, thanks so much. Valerie Teitel there on the BOJ. Let's also talk about the ECB. Maria today is in Brussels. So, Maria, a hawkish Christine Lagarde, an even more hawkish Mr. Nagel. So what happens after July?
Absolutely, and the message yesterday wasn't clear. Today you have the German central bank, the Bundesbank, making sure that message is clear. Mr. Nagel saying in a speech that the ECB may have to continue increasing rates after the summer. Of course, that points to the September meeting. And he also says when we get to that peak, we need to make sure that inflation does stay and goes back to target in a timely and safe manner, which again points to that let's stay higher for longer. A lot of that already, Francine, points and feeds into that press conference yesterday from Madame Lagarde, which guided the markets to a July hike. The conversation now is fully about September. And overall, if you put all of this together, they've completely shut any debates about a pause and reassess. This is a central bank that is on a journey to a destination, and the messages are going to continue to hike. And of course, they have to some extent. When you look at the projections they put out yesterday, you look at inflation, even by 2025, inflation would still not be on target. This is a single mandate central bank. They've got to get to that close, but below 2%.
Thank you so much. As always, Maria Tadeo there, our Europe correspondent, of course, on ECB Watch. Now, we're joined by Hugh Gimberg, global market strategist at JP Morgan Asset Management. Hugh, are you like relieved that, the three big ones are over? That there's a lot more going on next week. What was the most surprising thing that you heard this week from either the Fed, the BOJ, or ECB?
What a week, as you say.
What a week.
I would say the most surprising, to my mind, would have been the ECB yesterday. I personally thought that Lagarde went pretty much as far as she possibly could in nailing the colours to the mast for a hike in July. And that, to me, means that the prospect of 4% interest rates in the Eurozone now is a very real one. I think the ECB, had they wanted to retain more flexibility, more data dependency, they had the option yesterday, but instead the message was very clear. The start of the press conference in particular, we are on a journey and we're nowhere near finished.
So why? And I don't know whether it goes back to, what we also heard from Bank of Canada and the RBA, is that inflation is slowing down, but it's sticky and it could be there for longer.
Yeah, so two factors here, I think. First of all, the wage data is probably the most important of anything that we're tracking at the moment, because it's the strength of wage growth and the tightness of the labour markets which is really feeding the stickiness of core inflation that the central banks are looking at. So at the moment, the ECB felt, I think, a lot more comfortable 6-9 months ago, but now you update the story and you look at lots of the wage negotiations that have been taking place, they are starting to become more concerned about a tightening labour market leading to that persistent inflation over time. The second point, I think, is that they are very concerned, all central banks here, about undoing lots of the work that they've done over the past 18 months. And therefore, the message from me couldn't be clearer from both the Fed and the ECB. They are determined to see growth weaken to bring inflation back under control.
How much pain does that mean for Europe? And again, this is a more complicated task because you have different countries that are frankly at different cycles. And so the growth prospects in some of them could be really weak.
So I still think it's important to stress that we're looking at a relatively mild downturn ahead. We do not see a recession of the scope or magnitude of the financial crisis. That feeds through into a market view as well, where we think that earnings do need to pull back over the next 6 to 12 months, but it's likely a milder contraction in earnings than you would see in a typical recession. But still, I think really the key macro question everyone has to answer at the moment is it possible to see inflation come back to target without a slowdown in growth? And in our view, the answer to that is just no.
Hugh, we're just getting some breaking news from Mattis Muller. Of course, he's a governing council member of the European Central Bank. He's saying, look, ECB rates have not yet reached peak. They're on message. Also saying that inflation is still too fast. Again, so is this, to exactly your point, is that it's wishful thinking in the markets continuing to say, like, look, the inflation could come down as quickly as went up?
Exactly. I mean, Madame Lagarde yesterday was saying it was a relatively harmonious discussion for the ECB, which is not something we've always heard. But I think the consistency of message here is absolutely on point. And when you look at how markets have been reacting, both in bond markets and in equity markets, there's an element here that feels a little too good to be true. You look at the market reaction to Jay Powell on Wednesday night saying, well, actually, we just don't believe you that you're going to hold rates through the course of 2024. The most significant thing I took away from that press conference was his statement, rate cuts really are a 2025 story now, not even just next year.
Okay, but Hughes, this is so bizarre for the market. So the markets think that central banks will be a lot softer, right, or not as hawkish as they're going to be. And we're seeing a lot of bizarre equity moves every 2 days as they try and figure this out. Is there a worry that we could see like a strong credit crunch or something actually fall off a cliff because interest rates have risen so fast so quickly?
So credit conditions are clearly a big factor here. We know they've been tightening. We expect them to tighten further, and we expect that to be a drag on growth over the next 12, 18 months. Again, important to stress here that we think this is a relatively slow drag. We think that lots of the stimulus and really the lending that was in the system prior to all of the banking stress that kicked off in March will continue to fuel growth over the coming months. So that recession view is being pushed out and still looks relatively mild. But I find it hard to see with lending standards at these kind of levels that economies can dodge recession.
So how does it play out, actually? Are we going to see banks under pressure? What does it mean for how you construct your portfolio?
Of course. So this, for me, is a time where you're looking at all the different options, really, to add ballast into an equity portfolio. And so the first one of those is strong balance sheets. I think there's a danger here. Everyone is always talking about high-quality stocks as something they'd like to own. But the key point is that it's in weaker periods of the economy where attention towards the strength of balance sheets really, really pays off. And so that would be number one. The other is around dividends. We think that in a relatively mild earnings slowdown, there's really not going to be much need at all for dividends to be cut back. And so that takes you to some of the more defensive sectors. You look at the utility sector as a good example. You look at healthcare, where steady payouts can continue, and you have a relatively low beta compared to the rest of the market. So defensive over cyclicals, but really quality above all else.
Hugh, thanks so much. Hugh Gimberther, global market strategist at JP Morgan Asset Management. Coming up, it was the biggest jump in 6 weeks. We discuss what drove the crude price higher yesterday. And of course, we also discuss the outlook for oil. That's next, and this is Bloomberg.
I don't think we can replicate Tesla. Tesla is a unique because when they founded and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Top names in business are on Bloomberg.
The energy in Shanghai was like New York on crack.
Things are going to get worse in the economy at the same time as you have this internal conflict.
We need more bipartisan conversations because this is an American issue.
Are some of these assets commodities or are they securities? And we've been asking the SEC for a long time.
But I think there's more problems under the surface.
It's incredibly exciting, as important as the birth of the internet.
Nobody covers business like Bloomberg, your global business authority.
I am always optimistic, and people have often concerns which are not materializing.
So you don't have any concerns about China's slowdown at the moment for luxury?
There are many concerns for the world, but there were always concerns for the world. And finally, our activities are growing very well.
Well, that was the LVMH chief executive, Bernard Arnault, discussing the outlook for the company in the wake of China slowdown. Now, we're just also getting some breaking news out of some of the companies that want to spend money to actually build their chip factory capabilities. Poland says that Intel actually will spend some 20 billion zloty on a new plan. So you can see on the back of that, Intel gaining some 0.6%. Oil steady in Asia after jumping the most in 6 weeks yesterday. That's as weaker dollar and expectations for more stimulus in China outweigh concerns over higher interest rates in the US and Europe. Now, for more, we're joined by Anthony DiPaola in Dubai. Anthony, so can oil prices keep up this pace? And good morning.
Good morning, Francine. How are you? Yeah, I mean, it's kind of the China aspect of that picture is what the market has really been waiting for in terms of supporting those oil prices. We saw those gains yesterday. And as you said, it's on an expectation that there'll be some additional stimulus, some additional work there that will help kind of solidify that growth in China. If we do see that, then the expectations that we're hearing from the market is that will shore up oil and keep those gains moving forward. But that, as I said, has been the missing piece in the market because traders have really been waiting to see some evidence that China is coming back. All the expectations from the traders that we're talking to, from OPEC+, from the International Energy Agency, and many of the analysts are for a very tight second half based on that growth from China. But so far it's been elusive, and that's why we've seen some of those concerns about recession and interest rates in the United States taking over more of that narrative. So if we do see this growth, the opinion is that will support those prices going forward, Francine.
So, Anthony, European gas jumped this week. Give us the details also of the Dutch field that's set to close.
Yeah, I mean, that's another big volatile market there, given the situation in Europe over the last roughly year and a half. So normally a smallish and declining gas field in the Netherlands closing down might not be that big a news, but we are in this period of scarcity and some supply shortages that the Europeans are taking serious steps to remedy by bringing in liquefied natural gas and gas receiving terminals that allow them to get natural gas by ship. They're moving to other sources. They've had to reuse some coal plants, which is obviously a negative for the European green agenda. But over the long term, the European countries, the European Union wants to move away from things like gas, wants to get to a greener future. So this is also a step in that direction. It's a long-term view that's having these short-term implications in terms of the immediate-term gas supply that's been exacerbated by the war in Russia and Ukraine. Of course, they are still getting limited amounts of Russian gas through Ukraine, but this is another wrinkle in that picture that Europe's going to have to deal with, Francine.
Anthony, thank you so much. As always, Anthony DiPaola there in Dubai on the latest with energy. Coming up, British MPs are set to vote on whether or not to punish the former Prime Minister Boris Johnson after a damning report into pandemic-era parties. So we'll have more on that next. And this is Bloomberg.
deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Our studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
The Fed has inflation coming down more slowly than a lot of folks. And the Fed also has a smaller rise in unemployment than a lot of people expect. And so I do think that if the data is closer to market expectations versus Fed expectations, that they could be done in July. So I really think for the first time in a while, they really are data dependent.
It is very likely the case that we will continue to increase rates in July, which probably doesn't come as a big surprise to you. But that's what I'm telling you. And this is so because we are determined to reach our target in a timely manner.
Well, that was ECB President Christine Lagarde and the former Fed Vice Chair Richard Clarida on the inflation fight in Europe and the U.S. Now, we do have a couple of chip stories. First of all, Intel. Poland is saying that Intel will spend 20 billion zloty. That's about $5 billion on a new plant. We know that Germany is also spending quite a big number on trying to get their chip manufacturing in the country to where it needs to be, which is just a lot bigger. Now, the former U.S. Secretary of State, Henry Kissinger, is warning that China could end up in a military conflict with the U.S. over Taiwan. Speaking to our editor-in-chief, John Micklethwaite, he says he still holds out hope for dialogue that will lead to de-escalation.
Well, on the current trajectory of relations, I think some military conflict is probable. But I also think the current trajectory of relations must be altered. And for the weeks preceding our discussion, there have been signs on both sides of trying to end them. They have not yet actually engaged. Discussions that both sides explain to each other what their core interests are and determine how to handle situations in which their core interests clash. And I would hope to resolve interests in which core interests clash without conflict, or manage to avoid situations of clashing core interests.
Well, you can watch the full conversation with the former U.S. Secretary of State, Henry Kissinger, on Bloomberg TV and on our website this weekend. Now, the UK Deputy Prime Minister Oliver Dowden says the government is focused on the task in hand, despite another week of political turmoil involving the former Prime Minister Boris Johnson. Well, he spoke to Lizzie Burden exclusively.
The message that I have for business is that three things. First of all, I can assure you the government remains absolutely focused on the job at hand. Secondly, that we have worked to bring back that stability to the UK economy, which people rely on, and you have. And thirdly, you have in the Prime Minister, in the Chancellor, indeed in me as Deputy Prime Minister, people that want to ensure that stability, who get tech, who get the opportunities, and are determined we seize them to drive the prosperity of the nation.
So the person who did that interview joins me now, and we're delighted to have Lizzie Burden. Lizzie, when you look at, of course, I mean, it's been not dull, to put it very diplomatically. Like, what struck you the most?
Well, obviously, Oliver Dowden did not want to talk about Boris Johnson and Partygate. He's casting this long shadow over the government, and really they want to get away from these distractions. Oliver Dowden's message to business was that they are getting on with the job, that Rishi Sunak knows what he's doing when it comes to tech. He called him a tech bro. And they're excited to be hosting this global AI summit in December. We thought it was going to be in the autumn. Now we know that it's going to be in December. And really, sticking to the priority of halving inflation by the end of the year, not just saying that they're going to reduce it, even though that was the language that Rishi Sunak had been using at Prime Minister's questions, but that against a backdrop of inflation that's sticky, growth that's anemic, and it looks like we're going to get another Bank of England rate hike next week at the meeting.
Yeah, that probably will help with inflation. I don't know how you half inflation. I don't even know what that means. We'll get you back on to talk about that. Lizzie, thanks so much. Lizzie Burden there, our UK correspondent. Coming up 3 months after the collapse of SVB, how are the banks holding up? We'll be joined by Hugh Van Steenis. This is Bloomberg. What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. Now, what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets. China open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
The ECB raises rates to the highest level in 2 decades. President Lagarde says a July increase is very likely, and the Bundesbank president hints at more hikes after the summer. The yen drops as the Bank of Japan keeps its ultra-loose monetary policy and says it's ready to add stimulus if needed. Plus, the former U.S. Secretary of State, Henry Kissinger, tells Bloomberg the weakening of Russia risks stoking new tensions. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the U.S. banking regulator is reportedly seeking bids for the sale of the collapsed Silicon Valley Bank's German assets. According to Reuters, bidders have until next Monday to submit offers to the FDIC for the $460 million portfolio. Now, the news comes as the Justice Department probes the role of Goldman Sachs' role in SVB's final days before its demise. Now, to talk about the banking sector, some of the things that were well done in the UK or question marks around it. Hugh Van Steenis, he's vice chair of Oliver Wyman, plus Bloomberg Opinion's Paul Davies, who's been, of course, covering the banking story for a very long time. So thank you both for joining us. Hugh, I mean, it's kind of amazing, actually, that, 4 months on, everything was okay, and then suddenly we had SVB, and then we had Credit Suisse. When you think about it, like 3 months on, could we have done things differently?
Oh, I'm sure we can. So thanks for having me on, Francine. I mean, look, I think the good news is the large banks sail through this without much of a scrape. They risk manage themselves properly. I mean, I think in 3 months on, if you look at the 4 banks which failed, it looks more and more like individual idiosyncratic risk. They took some dumb risk decisions, and there was also some supervisory failures. So I think, in retrospect, more action should have happened probably 6 to 12 months earlier, and it was the preparation rather than the panic.
But are we going to see more regulation? I mean, are we just at the beginning of trying to understand what happens next because of what we've lived through?
Yeah, so, I mean, in the US, certainly we're going to see more regulation. I think Michael Barr, the vice chair for supervision, is due to, I mean, there's a bunch of stuff about to come out from US regulators, but I think it's going to be later in the summer, towards the autumn, when he's going to release some of the changes that they're going to make for some of the smaller banks, which were particularly vulnerable in this recent crisis. And that will be, changes to how they account for some of the bonds that they hold, a closer look at their liquidity and how they manage their most liquid assets, and things like this. And all of this is designed to address, the kind of the 2-tier regulation that we ended up with between sort of the very largest banks that were regulated very properly and the smaller banks that maybe weren't.
So are we going to see, is there anything else like that coming? I know there's big Wall Street titans here and there saying we could see more distress in some of the smaller banks in the US. We have questions about Greek and Italian banks, the smaller ones, again, because of the TLTROs that are due.
Yeah, so, I mean, obviously, Europe is somewhat further behind the US in terms of the contraction of the money supply and the competition for deposits among banks. I mean, the great defense for Europe is that the amount of money in the system, the deposit levels didn't grow nearly as quickly in the first place as they did in the US during the COVID crisis, and they don't have so far to shrink. But we will have these big TLTRO repayments coming due at the end of this month. And, I guess people are slightly concerned that towards the edges of the system, among some of the smaller banks, especially in Italy, is the place where we might see some strains beginning to show. But there's really not been the same level of deposits moving around the system or competition for funding in Europe as we saw in the US in March.
When we look at this period in time, will that be like peak worst banking in 2023, or do you think there's something ugly that could be about to happen?
I think look, at one level, it's a very difficult market. If even Stan Druckenmiller says it's the toughest market for 30 years, then it's a tough call. Yeah. Look, what's fascinating is, if you take the last 50 years, there was almost 5% deposit outflows in March. That's the worst in 50 years. So it's almost strange that 3 months on, how placid things are. I mean, the cocoa market reopened this week. We've had the 4th set of downgrades from the US mid-cap banks. Stocks hardly moved. So kind of it's now sort of it appears to be more in the price. No, I think that I think the good news, and hopefully Paul will agree, is the largest banks sailed through this pretty well.
Yeah.
And in a way, it is Mike, I was at the Milken conference, and Mike was telling me, in some ways, this is like the 70s and 80s. The narrowest banks who reached to the top shelf are the ones who fell over.
But does it mean that right now we have to take a bet on saying, like, look, it's either because there's resilience in the markets and the banks, and actually so we can weather whatever's coming, or whether we're just delaying some kind of ugly event?
So I think we need to distinguish between the chronic and the acute. So I think the acute phase is over. But if there was one thing I'd watch for the next 2 months, it would be with the flood of issuance of T-bills in the States, where are they going to get funded? Is it going to come out of the $5 trillion of money market funds and the sort of overnight reverse repo facility, or from deposits? And I know there's a couple of senior bankers who worry if it comes from the bank deposits, that could set off another chain. But the chronic is the one I worry about. We've got the most, post the Fed's move yesterday, we have the most inverted yield curve in decades. And that's gruel for a bank. Yeah. You can't make money on your common and garden business. And so I think it's the earnings bleed rather than the acute phase that I'd be more focused on now.
And Paul, so everybody now knows what an AT1 is, and I know not many people talk about it anymore, but I know you're focusing on it. Like, how does it change the way that banks will fund themselves going forward?
I mean, I'm not sure it will that much in Europe. I mean, the problems that we saw and the confusion that we saw over what happened with Credit Suisse is probably really a very a Swiss issue in the sense that they had kind of slightly different rules from others, and also obviously after the Swiss authorities decided to write down the Credit Suisse CoCo, the AT1 bond, as part of its rescue sale. The ECB, the Bank of England, came out instantly and said, essentially, we would never do the same thing. So they wanted to defend the market. They sort of want it in place. The prices have adjusted already. You know, some investor told me quite early on, markets have a very short memory. I think we've discovered that markets have possibly the shortest memory that we ever imagined that they could possibly have over this issue. So, I mean, you know, the pricing levels are slightly different from where we came into this crisis, but you know, interest rates have moved, you know, credit spreads generally have widened across a lot of different, you know, types of credit. So that's sort of understandable, really. I mean, that episode also seems to have faded, and regulators want those bonds, banks want those bonds, so I think they're going to stay there.
I like that, short memory. Do you think they'd have this shorter memory? I mean, you're also looking at AT1s and what that means.
So I think it'll work. Well, look, remember, it took 3 years for the Greek market to reopen after their delinquency. It took 3 months for CoCos. Now, obviously, it's different because the banks are more profitable. No, I think the one thing really is changing when I engage with the governors of central banks. Yeah. It's obviously we need CoCos, or we don't want extra sort of insurance packages around the equity, but fundamentally you want a diversified, profitable bank. And I think if we really look back at this, we had quite narrow banks fail and very unprofitable ones. And there's a real reappraisal. You know, let's think about it. We've now had, you know, JP Morgan was allowed to take over a bank breaching the 10%. I think the pennies dropped. Large, diversified banks are the better way through. And I think that's the more tricky thing which the regulators are wrestling with, because that's what they tried to stop, you know, 13 years ago. The
thing is that if they're too big, then they're too big to fail. I mean, can they even be regulated if they get that big?
Well, it depends. I mean, they obviously need to be exceptionally well managed and supervised, but at the end of the day, that diversification provides strength. So, look, you know, it will take a good team.
Paul, what else are you working on? I know a lot of the big questions is actually whether what we've lived through changes the banking models of certainly some of the European banks, because it changes the way that they have to treat depositors.
Sorry, in what sense, sorry?
In the sense that actually if interest rates go up, then they have to give more to people that deposit money with, and that changes their banking models. They're going to be less profitable. Yeah,
yes, they are going to be less profitable. I mean, I guess there's a difference between banks in different parts of Europe in particular. You've got, you know, in the south in general, a lot of loans that they make, the rates that they charge on them can adjust much more rapidly, especially when it comes to mortgages, versus in the north, where you've got a lot of kind of very long-term fixed-rate mortgages, and it's kind of, you know, the squeeze there could be difficult. But, you know, going back to one of the things that Hugh was saying about the wave of treasury issuance in the US and the role of money market funds in sort of funding markets and where people put their cash, you know, Europe just doesn't have that same kind of complex to anything like the same degree, and there isn't really... And deposits don't really flow around between countries within Europe either. So the level of competition for funding is just not nearly as it's not so much of a contact sport in Europe as it is in the US, perhaps.
Okay, Paul, thank you so much. Bloomberg Opinions there, Paul Davies, Oliver Wyman. Hugh Van Steenis stays with us, and we'll talk about the UK shortly. Also coming up, Russia's war in Ukraine has changed the geopolitical landscape in Europe and Asia. We'll bring you a little bit of our interview with the former U.S. Secretary of State, Henry Kissinger. This is Bloomberg.
Would you say race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupied areas I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress, and somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on that folks are so excited about it. Climate tech is the hottest area to be in.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now let's continue our conversation with Hugh Van Steenis, Vice Chair of Oliver Wyman. Hugh, thank you so much, first of all, for sticking around. A lot of the time you're focusing on banks, right? Yeah. And if we zoom in on the UK, this is a rather complex, small, open economy which has maybe exacerbated challenges compared to other parts of the world. How do you say the UK developing in terms of policies, but also what it means for bank models?
Well, look, so the key conversations we're having with, let's say, some of the financial leaders is there a bit of overheating, or has the Bank of England started to potentially lose control of the long end? Yeah. You know, they haven't yet, but there's that nervousness. And as a result of that, as inflation becomes more embedded, rates will have to go up even more. And so certainly the banks and the investors are worried, well, what does this mean for the housing market? What does it mean for UK loan growth? It just feels quite more challenging than it does something in the Eurozone or the US at the moment.
But the Bank of England hasn't done a bad job. I mean, they were behind the curve, and now they're playing catch up, but there's not much more that they could do, or is there?
No, look, in a way, everyone was behind the curve, so they had, if you like, they were in common ground with the Fed and ECB as well on this. No, I think the challenge in some ways is that is obviously 70% of our food is imported. There's not much the Bank of England can do about the fact we have import frictions now in the post-Brexit world. So I think some of the structural issues are tougher, but it's not necessarily that monetary policy is the right solution to that. So I think you may end up with slightly more elevated rates. And I think that's certainly what the financiers are worried about.
Are you expecting a lot of distress in the UK, either companies, zombie companies, or companies that we haven't really quite heard about, not being able to refinance themselves, and what's happening with shadow banking?
So I think there's a sort of what you can see in the next 3 to 6 months, and there's what's beyond. All of the kind of high-frequency data and conversations is actually the next 6 months looks pretty benign. I've yet to see a bank who's starting to really worry. They don't have much commercial real estate, unlike the US mid-cap banks. They're not very big in leverage lending, so the obvious kind of grey spots, black spots, they're not there. The nervousness
but is that strange?
Well, it comes back to what you and Tom used to talk about, the longer variable lags, isn't it? Like, what happens next year? Will that, a lot more people we had 13 years of free money, so there's a lot of money got baked in cheap. There's also a lot of savings from the financial from the pandemic. Maybe it just takes a lot longer for monetary policy to transmit. I mean, I was at the Professor Charles Goodhart had an event for his 87th birthday, I think it was at the LSE, and he had a great line which is like, every monetary policy committee should have a financial plumber on it to understand transmission. And I think the risk is most central banks don't have those plumbers on there. It might just take another 12, 18 months for monetary policy to really click in, and that's why we haven't seen the significant slowdown.
So what does a policy mistake look like now? Should the Bank of England just do more or slow it down? This country is also extremely, extremely vulnerable to higher mortgages.
Yeah. Look, I think it's a very, very tough call. I think it's going gradually here rather than abruptly, because you want to watch for either stress in financial markets or quite frankly, amongst the borrowers. Because we haven't yet seen, even in the housing market, that many borrowers come through, have a rate shock yet. So I think it's slow and steady, unfortunately, but be very thoughtful about those lags into next year.
When you look at the UK and actually its place in the world in terms of regulation, but in terms of attractiveness of capital and capital flows, will it get better in the next 12 to 14 months?
Look, I'm not a political analyst, so at one level I defer to you, Francine, on this. But, you know, in the 13 months before an election...
given where politics is right now.
Yeah, exactly. So, look, the next 13 months are not the most obvious time for a big acceleration. Look, you know, I think there are, like everything in life, there's reason to be optimistic and there's reason to be cautious. I mean, the FDI numbers have been a bit dispiriting. But I think, look, one of the areas, for instance, we see a lot of it. Let's say if I go to the States, there's every conversation is around how can I get my share of the IRA? What can we do to fund that? We haven't done that in the UK yet. In the next 13 months, that's unlikely to click in. But yeah, there's good reasons to be optimistic there.
Hugh, thank you so much, as always, for joining us. Hugh Vancinas there, Vice Chair of Oliver Wyman. Now, the Russian President Vladimir Putin may struggle to hold on to power if the war in Ukraine forces Russia to abandon military aggression and accept a peace deal with Europe. At least that's the view of the former U.S. Secretary of State, Henry Kissinger. He sat down with our editor-in-chief, John Micklethwaite.
I worry about the fact that Russia has been an integral part of European history for 600 years, and in a very special way, because it is infinitely larger than any European country. And it has always been part of Asia, the Middle East, and Europe. That's a unique aspect of Russia in comparison to the European countries. So it has been torn throughout its history between a desire to become fully European and a fear of European technical superiority or capacity. Europe will become more stable, the world will become more stable when Russia accepts the fact that it cannot conquer Europe, but it has to remain part of Europe by some sort of consensus, as other states do. But I don't want Russia so crushed that it ceases being a factor of international politics in other regions and becomes a subject for European competition among the various states. So it is important for Ukraine to be preserved and for Ukraine to emerge from the war as an autonomous, strong, and democratic country. We have substantially achieved this objective by now. It can still be improved in terms of the borders of Ukraine in the what I hope will be the concluding phases of the war. But I would prefer to preserve Russia because the dissolution of Russia or the reduction of Russia to resentful impotence would set up a new set of tensions.
Now you can watch the full conversation with the former U.S. Secretary of State, Henry Kissinger, on Bloomberg TV and on our website this weekend. Coming up, it may be a cruel summer for football fans, hoping to see Lionel Messi play in Miami with ticket prices now rivaling those of Taylor Swift. More on that next. This is Bloomberg.
I don't think we can replicate Tesla. Tesla is a unique because when they founded and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, aren't you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the U.S. Department of Justice is planning to open an investigation into the PGA Tour's planned merger with Saudi-backed Live Golf. That's according to a report in the Wall Street Journal. So let's get more on all of this with our Joe Easton. Joe, I mean, this is a huge deal. Like, what do we actually know?
Yeah, so the DOJ are investigating, as you mentioned. They're trying to say it's to do with national security. So they're talking about land that the PGA Tour owns and whether that's strategically located, that kind of thing. But really, it seems to be more political and to do with sports washing and the general themes that we've had. There was a letter from some of the 9/11 families, which was obviously very sensitive, and they were very against this deal going through. And I think that has put pressure on the Democrats to take a stand. And this is being led by the Democrats as well.
So could it actually unravel the deal? I mean, how ugly is this going to get?
I think it could potentially unravel it, or it might just put pressure on the PGA. They were big rivals, the two, the PGA and Liv. They were big enemies, essentially. So this really came out of the blue. And it could put pressure on the PGA to kind of unwind this deal. Golf's pretty interesting at the moment. You've got the US Open on at the moment, so there's a lot of attention on it. but it could definitely have an impact.
Okay, switching to football, but it's also always about Saudi money because Lionel Messi did not go to Saudi. He went to the US, and there's Messi mania.
That's right. So people apparently paying $2,600 for tickets to see his debut against Inter Miami, which is pretty crazy, isn't it? Really, I remember I saw Messi in 2006. Yeah, I remember seeing him as a 19-year-old, and the ticket was £28.50. That was almost 20 years ago, so things have changed, but it is a lot of money. I've heard even more, some people paying up to $10,000 for those tickets, so it's pretty crazy.
I mean, those are the real fans. What's the latest on the United sale?
So Man United, that stock's had its best week since this news broke in November. It's risen about 30%. The latest is that, according to the BBC, they are not exclusively negotiating with the Qataris. They're still talking to other bidders. The thought was that it would only be the Qataris now in the deals, but there's potentially maybe Ratcliffe still around, but that hasn't ended yet. But the stock's definitely done well this week.
All right, Joe, thank you so much. What are you watching this weekend?
Arctic Monkeys.
There you go.
At the Emirates Stadium.
Away from football.
That's
away
tonight,
from
the
golf.
big concert.
That's the big concert.
Yeah, I'm not
Joe,
paying $2,600 for that.
No, I'm expecting a full roundup, though, of the Arctic Monkeys on Monday. Joe Easton there with some of the football and golf news. Now, let's also take a look at some of the things that the markets are watching for today. The BOE's inflation expectation survey. Then we also get Euro area final CPI figures for May. That comes at 10 a.m. At 3 p.m., we'll get provisional University of Michigan figures, including U.S. Consumer Sentiment Index for June. And lastly, of course, the meeting between the NATO defense ministers continuing today in Brussels. Quite a lot going on when it comes to markets, maybe trying to reprice. The other thing we're watching out for is, of course, any kind of banking news. Global stocks headed overall for the biggest or best week since March. I'm looking at some of the bets, of course, that the Federal Reserve will soon end its tightening cycle, and that's spurred on risk sentiment. Expectations are also growing that China's government will boost spending. So we'll have plenty more on that throughout the day. Bloomberg Surveillance, early edition, continues the next hour with Kriti Gupta in New York, Anna Edwards here in London, and this is Bloomberg.
Almost half of all American women in opposite-sex relationships now make the same or more than their husband. That's a record high. According to a new report by the Pew Research Center, a third of U.S. women are in egalitarian marriages, making roughly the same as their husbands, and another 15% of them are the breadwinners. Women with college degrees and no children, as well as Black women, are even more likely to make more or the same as their partners. But not everything is a bed of roses. Working wives still carry most of the weight of unpaid labor. Women in egalitarian marriages spend almost twice as much time taking care of the home or a loved one, while dedicating less time to leisure.
Women are continuing to go out in the formal labor market and contribute and are still bearing all of the load of responsibility that disproportionately falls on them in terms of family care.
During the pandemic, in the wake of school shutdowns, the height of the childcare crisis pushed nearly half of American women out of the labor force, a trend that's yet to be reversed.
Women are just really struggling to meet the care needs of their family, and at the same time are really leaning into the labor market. And I don't think we've seen this before in history, to be honest.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. This is Bloomberg Surveillance Early Edition with Anna Edwards and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Global stocks head for their best week in more than 2 months, while the S&P 500 snaps its longest winning streak since 2021. Expectations of additional stimulus out of China lift market sentiment heading into the weekend. Wrapping up a big week of central bank decisions, markets getting exactly what they expected, with the BOJ keeping its policy unchanged and the ECB delivering another hike. The ECB hinted that more tightening is very likely. And Micron's major investments in Asia, the chipmaker vows to invest over $600 million in its packaging plant in China, while nearing a $1 billion commitment for a factory in India. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York. Incredible momentum in the month of June behind the global stock story then, Kriti, whether that's coming from AI or now Chinese expectations and expectations of stimulus.
A story that has very much driven not only the gains in the S&P 500, but the tech-specific gains. The idea here simply being that the growth is so fast, and not only the big cap names, but even the chip names, that you are going to see that starting to get priced into the market, despite perhaps some of the rate risk you are seeing from the Federal Reserve. What's interesting to me, though, is just how quickly that sentiment is spreading across the index, which brings me to what we're seeing this morning. NASDAQ futures higher by 0.2%, but alongside it, also seeing just a little bit of positivity in Russell 2000 futures. Essentially, those questions of breadth, perhaps solving itself here, where you start to see even the big tech names lead the way, but taking with it even the smaller companies. And that's really important when we talk about the sustainability of the rally that we have seen over the last few weeks. The bond market getting very interesting here. The 2-year yield, again, really pricing in the narrative we heard from Chairman Powell earlier this week, and then followed by Christine Lagarde as well. The idea here simply being that there is more hawkishness left for the Federal Reserve. So you're slowly, very slowly, I might add, having this repricing in the market where you are starting to see yields creep higher and higher. 467 on the 2-year yield, front end of the curve, getting closer and closer to 5%. That is crucial, because just a couple of weeks ago, we were not talking about a 2-year yield hitting 5%. And now in the latest price action, we're seeing it again creep up to that level. Overnight, though, the BOJ, Anna, you mentioned this at the top of the show, not really giving
Kriti, we've got positivity across European stocks. Sharon Bell over at Goldman Sachs turning more positive on European stocks, talking about a lack of positioning in European stocks versus US stocks right now. Also talking about the earnings story and reaching the peak of rate hikes, even if we are not quite there yet when it comes to the ECB. That's her view around European stocks, so we take that on board. Broadly speaking, then, most sectors are in positive territory as we head towards the end of our trading week here in Europe. Let's roll on and show you some of the individual assets. A real focus on the euro right now. We've got the euro stronger against the US dollar. This was a story of yesterday, of course, with that interest rate differential story clear for everybody to see who was focused on the ECB yesterday. So those gains were made yesterday, but interesting that we hang on to them today. So not unwinding the euro's gains. 109.49 is where we trade. The euro also gaining against the yen, and in fact, we touched a 15-year low for the Japanese currency against the euro. So that's certainly something that's standing out. And again, interest rate differentials very clear. The ECB continues hiking. The BOJ, well, it never really started. Still in negative interest rate territory, of course. This is Müller-Maersk, the shipping business, Maersk, down by 3.4%. One of the brokers putting a sell rating on that stock today. So as a result, their focus on a weaker pricing environment in terms of freight rates. That's something we've seen already, but the broker's suggesting that's going to intensify that dynamic. And natural gas prices, certainly worth keeping an eye on. I've had this in the board the last couple of days because it was moving much higher to the upside. Well, today we see it moving lower, down by 15.4% today. It's up 40% month to date, sorry. So certainly we have seen a strong rally, but now we retreat just a little bit. I suppose the message you take away here, Chrissy, is there's incredible volatility in front-end futures when it comes to natural gas prices for Europe right now.
Yeah, the commodity story just keeps rearing its ugly head over and over again as we talk about the inflation story, not just here in the States, but around the world. And that's going to be crucial, again, as we talk about just how these Asian central banks are kind of talking about digesting the inflationary story, which brings us to the big one overnight, the Bank of Japan decision. We want to get a little bit more context about where to go next. Bloomberg's Valerie Teitel joins us over in London. Valerie, we kind of covered the price action, which was a whole lot of nothing. What matters here? Where does the BOJ go next?
Look, the market is very keenly focused on any subtle differentiation in Ueda's words when it comes to his outlook from inflation, and he really just did not give that the markets today. His comments in the press conference let yen weaken further as he said things like, we expect inflation to come down towards the end of the year, and we're still unsure about the wage outlook. Again, Ueda and the Bank of Japan really want this inflation to be sticky, and they are in no rush to exit easy policy until they see that. Now, let's look ahead to what we have next week, because arguably it's as busy as this one. We have the decision from the Bank of England, and 2 days prior to that, we get UK CPI. The risk is another hot inflation print could actually bode the Bank of England to do a supersized hike. I know, Critty, you thought maybe we left 50 basis point rate rises in the past, but next week we could have one from the Bank of England, that's for sure. We also have the new governor in place in Turkey. Now, JP Morgan out with a note saying they could hike to 25% as they return to more conventional monetary policy. We also get decisions from more European central banks, including the Swiss National Bank and the Norges Bank, both expected to hike rates. And then the Latin American economies take center stage as well. We get decisions from Brazil and Mexico, both expected to hold.
Okay, a focus on EM rates then next week. Valerie, thank you very much. Valerie Teitel joining us with a look at the BOJ and some of the other market themes. Now, the ECB also delivered its decision this week, and it was in line with market expectations. Here's what President Lagarde had to say.